Hi, I'm David Stein of Money for the Rest of Us, and this video is on what do you do when an investment loses money. Despite our best efforts and to thoughtfully select investments that only go up in value, there are times when investments go down, they fall in price, and we lose money. Perhaps those losses are only on paper, but I find that paper losses feel just as bad as realized losses. In fact, sometimes they feel worse because when we have a losing investment and we sell it, then we put it aside and we don't have to worry about that. But if we continue to hold a losing investment, there's always a fear it could fall further. So if you have an investment that has lost money and we sell it, eventually that pain subsides and the regret kind of goes away. Numerous academic studies have shown investors are more likely to hold on to their losing investments and sell their winners. This is called the disposition effect. A more rational approach would be, at least from a capital gains perspective, would be to sell the losers and hold on to the winners. But we're not rational. We would rather sell a winner because we can lock in profits. It makes us feel like we're a successful investor. And if we sell our losers, we can just get away and just ignore it and forget about it and only remember our winners. But here's a thought. If the investment is not an individual stock or a commodity, perhaps it's an asset class, an exchange traded fund, or an index fund, and the entire asset class goes down. Is that really a mistake? I don't think so, but we still feel like it does. For example, right now I have about 7% of my portfolio in an asset class that's been underperforming the last several years. They're called Master Limited Partnerships, or MLPs. These are investments in energy infrastructure, such as pipeline and storage facilities. They have had a really tough time. In 2015, they fell about 32%. And then they rebounded in 2016 and gained 18%. And now they're back down this year. And so it's a very, very volatile asset class. And whenever it goes down, I feel bad. And I feel like I'm losing money. Why do I continue to hold this particular investment? I continue to hold MLPs because they generate an attractive income stream. They yield close to 7%. And it's a fairly stable asset class. MLPs are like a toll booth on a highway in that they collect fees from oil companies to move and store oil and natural gas. And they collect those fees irrespective of energy prices. But the challenge with MLPs is they start to trade. Whenever the oil price falls, MLPs fall just like oil, even though they continue to collect those fees. And so it's been a challenging asset class to own, but I continue to do it. And so the question is, even though I'm underwater on my master limited partnerships, should I sell them? And these are the same questions you should ask if you have an underperforming investment. The first thing you should ask is, why did you buy the investment? And does the thesis still hold? I bought MLPs because I believe that energy infrastructure will continue to be built out in the U.S. and there'll continue to be global demand for oil and natural gas in the decades ahead. Now, there's an oil or energy transition going on, but I don't think we're not going to use oil pipelines and natural gas pipelines and storage facilities. So just like a toll booth, they'll continue to generate income. So my thesis is still there. Another question I ask is, what would happen if the particular investment falls further? Will it undermine my lifestyle? Do I have such a high percent of my portfolio in that particular investment that if it continues to fall, it's gonna impact my retirement? No, it's only about 7% of my portfolio, so if it falls further, I'm gonna be perfectly fine. The other question to ask is sort of, where does this particular investment fall in your portfolio? Is this a long-term holding or a short-term holding? And what about the mental accounting? What do we think about it? How do we classify it mentally? And in my case, master limited partnerships, they're a long-term holding. And so I'm comfortable with the volatility and comfortable with the fact that it can underperform other asset classes because I continue to get that income stream. And so while I really, really hate to lose money investing, I'll continue to hold master limited partnerships until the thesis change, until for whatever reason, it becomes clear that we're no longer going to use oil and natural gas and need to move it around and store it. And I think we're several years, if not decades, from that. And so I'll just suffer through the volatility, and I put it in my mental account of long-term investment, long-term volatile investment, and I'm willing to keep it there and not sell it because I continue to get that income stream. So you should do the same thing with your investments. If you have something that's underperforming, go through those same questions. Why did you hold it? Has the thesis changed? Which mental account, which department does this fit into? And if it continues to fall, will it impact your lifestyle? So hey, if you like this video, go ahead and subscribe to my channel. And if you have any questions or comments, you can leave those below. Thanks.